Investors and traders, welcome to the channel. Market chart pattern. Today is 17th of March 2024. I hope everyone is having a great weekend. In this video, we are going to cover the key US stock indices as we always do for this video segment. And as always, this video is for educational purposes only, and it is not a financial advice. With that, we'll take a look at our timing model that we have been following for quite some time now, and it has had pretty good success in my opinion. And what we're looking at is the daily chart for the Dow Jones Industrial Cash. So this is not the futures market, this is the cash market. And what we see is that we had some timing coming in around 27th of February 2024. That was last month. And the way the timing works is we have to give it 2 to 3 trading days on either side. So sometimes it could come to 2 to 3 trading days before, sometimes a little bit later on. And what we have seen is on 23rd of February, which was the Friday before the 27th of February, we have seen the market make a top. And after that, the market has moved lower to sideways. So in fact, it is in a trading range. So with that in mind, the next key date that we are watching for now is between the 2nd of April 2024 to about 4th of April 2024. We'll keep that in mind and we'll see what the market is likely to do. Just a reminder that the next week we are going to have the Federal Reserve FOMC meeting, and the Federal Reserve is likely to make its decision on interest rates, whether they are likely to hold the interest rates, cut the interest rates, increase the interest rates. We do not know. The chances for what the market was pricing in terms of rate cuts, that has gone down quite a lot. So there is actually better than 50% chance, in my opinion, that the rates will be held, and the expectations for the first rate cut perhaps they're already shrinking, would could move to the June meeting, and this is what the market is actually telling us when we will take a look at the interest rate markets. So really key week for the markets coming up, major interest rate decision. And the thing is that the Federal Reserve could just do nothing on the interest rates, and they could still come in and give a dovish statement, which could actually set up a tone for the markets. We'll have to wait and see what their tone is going to be in terms of the future projections. Okay, with that, let's take a look at the interest rate markets. I'm going to start with taking a look at shorter term 2-year treasury yields. So this is really shorter term 2-year treasury note, and what we see is that since 8th of March 2024, the yields have been rising every single day. So 2-year is really a key one to watch, because in my opinion, this is something, the yields on the 2-year note is something which the Fed actually watch as well. It's just my opinion, and I had done a video about it quite a while ago, in that I just kind of overlay other markets, and we begin to see that how the Fed funds rates get impacted just by looking at the yield for the 2-year treasury note. You can find that video in my old videos section. So here what we see is if we begin to connect the dots in terms of the trend line, one spot, second spot, we have this trend line in place now, and the market is gunning for the highs of the 23rd of February 2024. So the rising yields is in my opinion not going to be that great for risky assets, especially stocks such as the tech stocks, which are growth stocks. And some of these stocks actually need quite a lot of financing, and if the financing is or to refinance becomes more expensive, then of course that has an impact on the cash flows. So with that, what we see is market going for this level one more time, and if it is able to get above that, that means that the market might actually be going back towards the 5% mark on the 2-year treasury note. So this is something what we are watching for. Now let's begin to take a look at the long bond futures. So this is the 30-year bond futures chart, the daily chart. Last time when we were looking at this, the market had held this key level around 117, which is very close to the 50% as well, came in with the 1.272 expansion of this swing. And the chances were that maybe this market is still in a corrective move in a pretty long bear market, which started in March of 2020, could in fact do this ABCD. And now put a question mark there because it all depends upon this B point taken up to the downside and this C point not broken down to the downside. So what has transpired over the last week is there has been a fair amount of movement in this market, mainly because of the inflation related data coming in harder than expected as CPI, and also the core PPI figures which came out last Thursday. And we have seen a pretty big move in the market on last Thursday because of the data coming out harder than expected. So 120.12 and closes 118.25. That's like, more than 1.5 points. Fairly big move for this market, which is much bigger than the stock market. With that, let's take a look at the Treasury note as well. Excuse me, ZN. So this is the 10-year Treasury note, similar kind of pattern formation. Here what we see is basically the market finding resistance. Let's try to see, yeah, from the 61.8% retracement, and looks like it's going to go and challenge these lows as well. So even on the 10-year Treasury note, the markets are actually experiencing higher yields now and lower prices. So here what we're looking at on the weekly chart, much like the long bond future chart, here the pattern that we are watching for is this point B here, and we were thinking that maybe it's going to go and challenge these highs with an ABCD one-to-one price projection fashion, and we have this 38.2% retracement coming from the highs reached in March of 2020. Market might actually try to make an attempt towards clearing out these highs and maybe towards this level 118.20. But what we have seen last week, it's a pretty negative close. These lows, which is in fact the point expected point C for us, could get challenged, and if it actually begins to move lower the price, then we could in fact be looking at a B, C, D one-to-one price projection, which could in fact take it lower to around 108 level. So we are this coming up a week is going to be really important because the Federal Reserve is coming out with their interest rate decision for the Fed funds. Okay, now we'll take a look at the US dollar. So this is the weekly chart of US dollar, and what we were discussing last week was there is a chance that we were initially watching for this purple one-to-one price projection ABCD, the price to get there, but with of course a question mark. And the reason is that over the course of last few trading weeks, so about 1, 2, 3 trading weeks, the market actually closed negative or in a trading range fashion, but still a bearish trend, as we can see with the black candle formation. So the close was lower than the open, so with that, what we were really watching for was this, whether this trend line is intact and which is keeping the US dollar lower. But what we have seen last week is that the US dollar actually was a little bit stronger at the back of the inflation harder than expected data coming out, and we have seen an inside bar. Now it's really key whether the market is going to break down from this blue line, which would mean that it's a pennant formation. The market then could move lower, challenge these lows, maybe even move lower. And if the market is able to close convincingly below 99, then the US dollar could move much lower. However, on the upside, if the market is actually able to break out of this red line, and in particular the old highs of around 104.40, then the chances increase that the US dollar will keep on getting stronger. And this level that we have been watching for between 108.50, around 108.50 level. That might actually become achievable, which would actually also put pressure on precious metals such as gold, platinum, silver, and those could actually also come under pressure. So really key week for the US dollar on the daily chart. Let me actually go back to the daily chart. Here we go. uh, there we go. So this is what we're also watching, this descending channel pattern formation. And here last Thursday, because of the data coming out, we have seen the dollar come and test the lows of 8th of March, reject lower prices, close much higher. And last Friday there was some movement to the upside as well. So the dollar is actually, in my opinion, range bound at the moment, but it does look, it might actually be holding these level. And then if what we have seen on the weekly chart is able to break above those levels, the dollar could actually be getting stronger. And what our opinion last week was that dollar might actually get weaker, but what we are seeing with the data coming out is that the dollar is actually holding steady. With that, we'll begin to take a quick look at the gold. So this is the gold future. Now the gold is something really interesting. The gold has hit the 1.272 expansion of this entire range. So what we are looking at is essentially this entire range here. And that's another reason that last week what we have seen is the market come a little bit of pressure, and rotating lower, about close to about $50 after hitting the level of 2200. So again, there is some key levels for this market which have also come in. And of course we have this wedge formation here. We can draw it like this here, something like this. And one touch, two touch, three touch here, right at the 1.272 expansion. So we could see this market trading in a range bound formation coming week. And of course the FOMC decision is going to have a pretty good impact on this market. So we are watching for this one. Okay, now we'll just quickly move to the stock indices. I just want to make this video a little bit quicker. And time permitting, actually I've not been able to do videos on the technology stocks, so we'll just have a quick look towards the end of the video, and especially we'll take a look at the Tesla stock. Okay, so here the market has actually met our target. 188 is what we were looking for as the 1.272 expansion. And what we have seen is the market just making going just in a trading range. This is what we were also expecting, because we had the timing come in. And what we have seen as of not the last week but the week prior, all the key markets with the exception of Russell 2000 hitting really key pattern levels that we had been watching for and forecasting for quite a while. And it's quite rare to see all these markets hit these levels at the same time. And whenever that happens, it's something important, and that's why we are paying really close attention to. And what these candles are in terms of candle pattern formations, these are doji candles. What it means is that the bulls and the bears, they had a pretty good fight all week long, and they were not able to decide which way the market will actually break out. And it's really what it means is indecision. So here the really key for us is to keep on watching this, and especially the lows. If it's able to break the lows of 4th of March 2024 week to the downside, then it means that we could have further pressure coming in this market for the prices to actually move lower. The other thing that I want to point out is, from a momentum perspective, the market is really strong. The 20-week moving average is over the 200-week moving average, and we have this really nice trend line in place and intact. But we can also see that this market is really extended. It's been just going up from the October 2023 lows, with really very few pullbacks. And whenever there was a pullback, it was spot up. So the buy the dip mentality was there. And it's only for the first time in this entire run that we are seeing 2 consecutive weeks where the market has actually gone range bound in a trading range, and rather a pretty tight trading range if you look at it on a daily and intraday basis. Again, important pattern to be taking a look at. Okay, so moving to the ES. So ES, that's the S&P 500 E-mini futures weekly chart now. Last week it had a bearish close as well, but the previous week it did not. So now right around our key levels, the 1.272 expansion of 5144, it actually reached and breached that to the upside. Now it's just also consolidating right here, excuse me, and we have this ABCD price pattern a little bit above completing as well. So in this region we are expecting this market to consolidate and maybe further range bound price action the coming week as well, although it could be a lot of volatility because of the FOMC decisions. Let's take a look at the NQ. This is the weekly chart of NQ, and here this market also reached the 1.272 level that we had been watching for quite a while, 18,570, and we have had two consecutive um, negative closes for this market, and last week was an inside bar, so it's really important to watch how this market is going to trade and close the coming week, and whether it's going to take the lows of 4th of March 2024 to the downside. If it's able to take it out to the upside, we do have further targets on the upside, which is actually a bigger pattern completion around 20,770, because we'll also have this bigger one-to-one price projection ABCD, which I mark in this green line also completing here. So whenever there is a confluence of two or more ratios or patterns coming together, something which we really pay really close attention to, because it usually is a pretty strong resistance or support depending upon the direction of the market. In this case it could be a pretty strong resistance as well, and what we are looking at for now is also, you know, market trading at resistance level, so we are really watching that. The market remains pretty strong from momentum perspective as well. Look how far below the 200 week moving averages, and also the 20 moving average is 17,220, which is a few hundred points above where the market is trading right now. But there is still remains a possibility the market could actually pull back to these moving averages. Now let's take a look at the Dow Jones Industrial. So here what we have been discussing about the Dow Jones. This is the futures chart, E-mini Dow Jones futures weekly chart. It's moving in a nice channel formation, and it's finding really trading at this. Let me just move these lines around. At the top of this channel formation, and it's just gone nowhere. It's just sideways trading, but still it's just creeping higher. So we're keeping an eye on it because our level of 39,137 has been met. But it wouldn't be too surprising that it tries to actually make an attempt towards the 40,000 psychological level as well, and then perhaps it could begin some profit taking perhaps takes place, because we are at really critical levels as well in terms of the levels that we were watching for. Last but not least, this is the Russell 2000. The Russell 2000, again, trading range right at the 61.8% retracement. This index has not been as strong as some of the other indices which have gone made new all-time highs, but just remains stuck in this range of 50% from low to high, and 50% from this high to this swing low. And yeah, looks like this 61.8% retracement coming around 2150 is the one which is going to keep it capped at these levels. Okay, let's also quickly take a look at the NYA, because this is something that we were watching. And the interesting thing is the NYA, which is New York Stock Exchange Composite Index, it has not completed its 1.272 expansion. So this is something, you know, there's a possibility that maybe the markets might actually still keep on creeping higher, and we might hit this level. This index, I believe, is no longer tradable, but it includes ADRs as well. So it's also an important index to be taking a look at. Okay, so now what we are going to do is let's take a look at QQQ. So the QQQ, just like the NASDAQ, NQ, the futures chart, also hit the 1.272 expansion. So this is another reason that the levels that we are trading at, we are meeting our targets. And now in terms of price action, what we see is we see some trading range to negative closes. So we'll just need to keep a close eye on, because we have these completed patterns, and the market could in fact make some sort of pullback. Now if I look at XLK, the XLK, unlike the QQQ, this 216 level is what we're watching for. We are fairly close but not close enough. But with the looking at the futures, the NQs, the QQQ, the chances are we might not get there. And it looks like this was close enough. There's a chance for that. Finally, we'll take a look at Tesla really quickly. So the Tesla stock has been pretty disappointing. We had been looking at some timing coming in as well, but it looks like there's a bigger cycle which is pushing the prices lower. And what we have now is that where the market closed, we have this channel formation, and just really closed there, and just below that around 156 we have also this ABCD pattern completing. So it looks like we might be getting pretty close between now where the market closed last Friday and $155 per share level, that there could be some support coming in. And below that, of course, the market can go for the 78.6% retracement, which comes around $145. And below that, of course, we have the 105 level. That's where this move actually started. So the Tesla stock is something which is under a great deal of pressure. Yeah, this is what we are watching in terms of the support. Just moving down to the daily chart, what we can see is this ABCD pattern coming pretty close here. This is our channel formation. Last Friday we had this inside bar formation. So maybe we could see after in a fair amount of time, 1 2 3 4, about a week, with the first time that the market was actually trying to rally. Let me see if it actually closed higher. And Yeah, and in fact, it closed as a dollar and 7 cents, 1.07. So it in fact closed higher, which it has not done in 1 2 3, pretty much the start of the trading week last week. So something really interesting right at the channel bottom, also very close to the ABCD price pattern. So we'll have to wait and watch and see how the Tesla stock is going to perform. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.